Hello students, today we'll start with a new chapter, that is the fifth chapter, Subsidiary Books. We have already learned journal in our third chapter. Now in this chapter, we're going to see how this journal is subdivided. A small business organization may be able to record all the transactions in one single journal. But if the business organization is large, wherein there are lots of transactions taking place on daily basis, then it would be a tedious task to maintain just a single journal to record all the daily transactions. Therefore, there is a need to subdivide this single journal into different special journals, and these journals are called as subsidiary books. This leads to specialization. It increases efficiency, saves time, and also serves as a quick reference. Now these subsidiary books are also books of original entries, as the transactions are first recorded in these books. The journal is divided into subsidiary books on the basis of nature of transactions. We already know there are different types of transactions taking place in a business organization. Now the transaction may be cash or bank transactions or credit transactions. So all the cash transactions are recorded in separate books, and all the credit transactions are recorded in different books. Then the bill transactions. You learn about this bill transactions, that is the bills receivable and bills payable in details in your standard 12th. Then there are other transactions which do not fall in any of these categories, will be recorded in journal proper. Now under cash transaction, there's single column cash book and bank book. So here the businessman or business organization will maintain a cash book wherein all the cash transactions are recorded. And if there are any bank transactions, then those bank transactions are recorded in the bank book. Now some business organization may combine these two books and maintain a two-column cash book. Now in this two-column cash book, there will be two amount columns, one for cash transactions and the other amount column for bank transactions. Then a separate petty cash book is also maintained to record all the small expenses in the organization. Then we come back to credit transactions. Now we all know what are credit transactions. That is goods purchased on credit, goods sold on credit. So if goods are purchased on credit, then they'll be recorded in the purchase book. If goods are sold on credit, then they'll be recorded in the sales book. Now students, keep one thing in mind. In purchase book and sales book, we record purchase of goods and sales of goods. If there are any assets purchased or any assets sold, we do not record them in these books. Then purchase return and sales return. So if you have purchased any goods and returned them back, or if you have sold any goods and the customer has returned back those goods, then they will be recorded respectively in purchase return book and sales return book. Then for the bill transactions, we have two books, that is bills receivable book and bills payable book. And if there are any such transactions which do not fall in any of these categories, they will be recorded in journal proper. For example, purchase of asset or sale of asset on credit basis, then depreciation charge will be recorded in journal proper. First, we'll see how all these cash or bank transactions are recorded in cash book. Now all cash transactions are recorded in cash book. The format of cash book is just like the ledger. It has two sides. The left hand side, that is the debit side, is called as receipt side, and the right hand side, that's the credit side, is called as a payment side. When cash is received, we record it on the receipt side, and when cash is paid, we record it on the payment side. Cash received on account of sale of goods or any income, then this recording has to be done on the debit side, that is the receipt side. And when we make any payments for good in cash or pay for any expenses, we record that on the payment side. Similarly, in case of bank book, if any amount is received by cross check, then that will be recorded on the receipt side of bank book. And if any payment is made by check, then we record that on the credit side, that is our payment side. Now in the cash book, first we'll see simple cash book. Simple cash book. All cash transactions are recorded in simple cash book. The format of simple cash book is, on the debit side we have the date column, then the particulars column, that is the receipt column, receipt number, LF, which stands for ledger folio, and amount. And then on the credit side we have the date column, payment column, the voucher number to be written in the voucher column, ledger folio, and amount. Now let's understand how to pass entries in simple cash book with the help of this following example. Now these are some of the transactions given. We have to prepare a simple cash book. So these transactions will be recorded in simple cash book in this way. Now on 1st of March, cash in hand 2,500. This is the opening balance of cash. So this will be recorded on the receipt side. In the date column we'll write the date. Then in this particulars column we'll be writing to balance brought down, and in the amount column 2,500. 5th of March, cash paid to Suresh rupees 1,000. Now we are paying rupees 1,000 to Suresh. So this entry will be recorded on the payment side. So in the date column we'll write the date, then by Suresh account, and in the amount column 1,000. The students, the cash book serves as dual purpose. It is a journal as well as ledger. So after we write the entry, we have to write a short narration as we used to write in the journal. So we write the narration being paid to Suresh. Then on 7th March, cash purchase rupees 500. Now when we purchase goods for cash, we have to pay the amount. So this again will be coming on the payment side. So on the payment side, we write the date by purchase account 500 and narration being goods purchased for cash. Then on 14th, cash received from Prakash rupees 1,000. Now here we have received cash. So this will be recorded on the receipt side to Prakash's account 1,000, and in the narration we have read being cash received. On 16th of March, cash sales, that is goods are sold for cash. So when goods are sold for cash, we will be receiving cash, and this will be recorded on the receipt side. 16th, to sales account 800 being cash sales. 20th March, paid carriage rupees 100. Now carriage is an expense, and since we are paying this amount, it will be recorded on the payment side by carriage account 100 rupees. Then paid salary rupees 500. Salary again is an expenditure. We have to record on the payment side by salary account 500, in the narration being salary paid. After we have made all the entries, then we have to balance this account the same way as we used to balance our ledger account. So the debit side is greater 4,300, and we get a balancing figure 2,200. Now this closing balance as of 31st March will be shown as opening balance on 1st of April. So we write on 1st of April to balance brought down 2,200. That's all for today. Thank you.